You are already knowing what it is. We are back again with them Hollywood trades. I got DXY in my sights right now on this one. Haven't really considered this chart as much with the movement lately. It just all seemed pretty neat. Like everything's been bullish, and so even with this chart being bullish for this period of time, as long as this has been bullish, you would expect that other things would be kind of choppy with that. What they say, risk on, risk off is here. There's not as much risk as the DXY is going down usually, which is crazy. That's how they classify it. But with the way the chart is situated, you can kind of see that everything else right now, because I feel like this is a double bottom type of situation. Maybe even if you count this level as an initial level, then a sweep, and then that whole Wyckoff uh, thing going on, liquidity sweeping with that. And so we come right below that sweep point. And it kind of struck me yesterday that I needed to show this because a lot of people say, I even had, I'm not going to show the messages, but I had a guy that was saying that you can't use technicals to see what's going on in the markets. It's all news based. That may be the case. I don't refute that. I'm a fundamentals guy myself, but there is something strange where either if you're a news guy, you have to say that this was already priced in for it to. I had this imbalance. Anybody who has this imbalance, if you have an imbalance indicator, you would have seen on the daily that it would show this imbalance here, up against this block, what they classify as a support block at this point, or an origin, that this was the origin of this bullish impulse here. From you always used the block that retraced and then the candle. So that's just supply and demand. That's just supply and demand 101. Anyway, God bless people, whatever. But clearly this candle respected that to the T, and that's what I wanted to show. I just wanted everybody to see this right here. That was a very peculiar. Whenever that happens, it's always peculiar to me because I haven't always known. About the specificity of the candle levels. Like, yeah, right. All candle levels, especially in what I call my bar method, or I would say it's just a bar by bar method. Is you know, every level is. Anybody who has watched me has known that I use every candle's level. However, knowing where particular candles will have an effect, like which candle will have the effect. And I always notice, I've been noticing lately more than ever, and that's why I have here BPR entry, balanced price range, because there's something really strange. And I want people in the trading community to really start paying attention to this. It's usually when it gets to an extreme level and then it grabs imbalance, right? And then we already know that this is a point of origin for a bullish reversal. So we know how order flow works. Um, Anybody who got trapped in this short right here in this range short is going to be trying to mitigate those positions, or any bot. I would say it's hard for people to, because a person might be like, oh yeah, I'm about to hit my TP or whatever, I don't know, and then hold that. But usually the bots will always just mitigate. And so if you have intelligent, you know, intelligent systems, it will mitigate. It'll be coded by time and everything like that. Like if there were orders here, it would calculate how much time it spent away from that level and how many closes it got. And then if there were any orders left here, it would just let them go, just because it would be safe to let them go according to the data in this range. I mean, I assume that some people might have programming skills, and all the banks have those, and that you just see stuff like that. That's what I wanted to. The whole premise of making this video was because I noticed this right here. And so, of course, right? I mean, if you start looking at levels, right? You just start looking at levels, shared level, shared level, right? This is a pretty neat candle here with the volume in it because this was the highest candle in the range. It could not close over these order block exchange, these exchange candles, but a mitigation or whatever, the same process we were talking about down here. And so in these exchange candles, it couldn't close above that. It couldn't, these levels right here, super charged bearish, right? And some might even consider this an imbalance of sorts, basically, because it just body, no wicks after that. And so that's pretty much what we've been dealing with here. But I want to see, I would like to see other people's analysis on this. I want to see what happens here in this range right here. I this is going to be the determining range for me because, as we know, right, in the bar method or what you'll call CRT or whatever, this candle's high is going to be important because it's the lowest bearish candle, and then obviously closing above this candle, which is the lowest reaching candle. So these are all would be heavy liquidity within these candles here. They would be used for an exchange. If we close over this candle's low or this candle's high and this candle's high, then we have this, and all depending on how we close over this. If we close over this will become the support. This zone right here, where the key level is and where this imbalance is attached to the key level. And again, this key level is from over here. So when you start looking at how price moves around the key level, how it created this gap here and use this key level as the testing high of that day, particularly at this exchange point, that's like humans. I don't think humans have that much precision. I just don't think that. And we'll just leave that right there. But came down right to here, right? I don't know precision, and then came down to here the next day. Now I'm just really studying this. I like to do these live so you can see it. And so now I want to see what it does when it balances this, because we've seen what happened when it balanced this. I want to see what happens when it touches this low. When it touches this low, will it do that weird thing, that weirdly precise thing, and kind of use this as a zone of testing? And we see, I mean, we expected to do a Fibonacci. Some people would throw Fibonacci here. Let's do it for good times. Let's do PD. So this is the 50% retracement, and that's the continuation level. Anywhere between here and here really is it could continue bearish from this for many reasons, obvious reasons. I don't know what to expect right here. I do see this indicator volume, MACD, volumetric, is telling us that we're at average volume. I don't really, I mean, we could consider volume here, right? High bearish, and then now we're at average volume, and we can start making a shift right here back towards bullish. But I don't know. We won't know until, and that's the thing. Like, I do say what I expect, but I don't really forecast. I won't forecast what will happen because we know what happens, and this is how you figure out indecision. We know what happens at balanced price ranges. We see it here. We see it over and over. We see it here. So when we balance this, what will we do here is going to matter a lot. And if we come here, I would think that we would be able to use this area as support. I would like to think that from here to the low here would be a support range. That's what I would think. That's what I always say what I think. And you'll see that's just, sometimes an observation, but we'll see. And I don't really have anything more than that for this chart. Just for curiosity, how far did this retracement come? This retracement came to the golden. You see, I built this Fibonacci. It's pretty neat looking, but this void area where I have it kind of clear, faded, that's the retracement zone. And so this imbalance existing within this range is very important. Any imbalances that exist in this range are very important. That's the optimal trade entry or golden zone, plus an imbalance and unmitigated price levels. Once they got touched and they were able to show us that it was a mitigation here, pretty much what we have so far. So I don't like keeping all this on my chart. I really wouldn't have marked most of this stuff because I don't need to unless I'm showing somebody. Really, I can see it. Like if we get close to it, I would have marked it. I didn't care enough to mark it before this video though, and I also wanted to mark out this to show y'all. I don't, like I said, I don't need to usually have all this stuff marked, but that right there, right? So that right there, and for you all's visual reference, this right here. So that's pretty much that. If we do go up, this obviously will be the target in this range. If we do go bullish, we ultimately have these levels here. If they do want to go back short, it should be from somewhere around this range. If they want to go back short after, if we do clear this range, we could continue south. But the only way we would know that is if we conducted a higher time frame look. I haven't even looked at the weekly. I'd be so much in the moment on those dailies and 4 hour. I can usually pretty much tell, but this will be the ultimate support range, what we call this right here. So we want to know how it treats this. We want to see how the wicks and the bodies, like the closes, treat us up in here. Of course, we have yet now a balanced price range as well on this chart here. All right, so we want to see how it treats that, and we expect it to, what do we expect? I don't know. This block is clearly being used as, this exchange zone is clearly being used as a bearish level still. So let me clean some of this up. This right here, I don't know. This is probably a certain point right here of a key level. I could change this into, I usually would do it like this. Change this into a key level there. Just so I know, because it was a previous level of interest for me that was designated different. This as well. Don't even know. I guess that would be key level 2, but this one seems more pertinent because of what happened here. This low gave us a little drop, and then now we have an imbalance and we have an order block. Again, I don't like marking all this on the chart. I'll probably delete it at some point, but they're funny. We're going up on 15 minutes. I usually don't like to go past 10, but I just wanted to, it's about that time to look at all this stuff. So we see what is going on here at these levels so far. So what I expect has absolutely nothing right now, other than seeing how we treat these levels here now. This is just pretty much, if you draw trend lines on here, which I do sometimes, but I don't like how they look. Right here is what we'll be having to see what's going on here in this whole range. It's pretty much that. This is the highest reaching weekly candle, so we're going to see how it treats its low. Do we close under that low or above that low? We should close above that low if they want to maintain a bullishness on this chart. And that's not humans. That's humans battling, obviously, in real time, but the huge money pending orders are what really determines like how are they treating this level. Like, are their bots coded to buy below this level or sell above this level? And that's pretty much all it is. Like when you're looking at these levels, like is it coded for those huge money orders to do what at that level? And that's pretty much it. That's the idea. Hollywood out. We will catch you on the next go around.